The Mullen Automotive stock price lingers near its record low due to dilution concerns. On February 23, the penny stock traded at $0.2169, just slightly above the lowest mark of $0.1750, and the stock has dropped over 99% from its peak level. Mullen Automotive aims to rival Tesla, Rivian, and Ford in the electric vehicle market. However, it lags behind because it hasn't delivered any vehicles yet, and Mullen's latest findings reveal the company's bankruptcy and dilution risks. The report shows that the company had no fourth quarter revenue. Meanwhile, its operating expenses skyrocketed to $64.9 million, and research and development costs surged to $8.6 million. As a result, the company's operations incurred a loss of $73 million, with shareholders' losses totaling over $376 million. And in this video, let's talk about Mullen Automotive and some factors affecting its stock this quarter. Based on their previous statements, Mullen Automotive should be profitable by now. In July of 2022, they agreed with Delpak Logistics to deliver 600 Mullen Class 2 EV cargo vans starting in November and continuing for 18 months. However, as of now, the company has not delivered any vehicles. There are also other questionable deals aside from this one. In 2018, the company made an agreement with a Chinese firm called Shantou Motors. Shantou K50 is supposed to be adapted for the American market according to the deal, and based on their statement, the company planned to sell the car by 2020. In 2022, Newgate Motor Group agreed to purchase 500 vehicles annually from the company. The company plans to begin delivering the cars in December. The quarterly report shows that the company did not generate any profit during the quarter. Dilution poses a significant threat to the Mullen stock price. Moreover, the company has been diluting its shareholders for a considerable period, and there is a possibility of further dilution in the near future. The company's cash and equivalents currently stand at $68 million. Now, developing electric vehicles is a complex and costly undertaking, as demonstrated by the experiences of companies like Lucid Motors. Mullen faces a challenge this year as its cash burn is high and it needs to raise capital. Additionally, the company holds significant debt of $93.8 million that is set to mature by September, with another $4.8 million due in 2024. The company will require additional capital to meet these obligations, which may be difficult given the expectation of high interest rates. And if Mullen cannot meet its debt obligations, bankruptcy may be possible in 2023 or 2024. The previous Mullen stock price prediction indicates that the shares will likely decrease further in the short term. However, it is important to note that there is a chance of a short squeeze occurring before the upcoming reverse split. Furthermore, Mullen's balance sheet conceals the difficulties they face. Again, Mullen Automotive reported its Q1 results on February 14, which may have disappointed traditional investors. The electric vehicle company generated no revenue and lost $376 million in just one quarter. This is notable considering the company's market value is only $400 million. Corporate governance watchdogs may have also been concerned as CEO David Michery and other executives received $36 million in stock compensation despite the company not producing any of their own vehicles yet. It's difficult to feel angry towards Mullen given the firm's perseverance as an electric vehicle startup. Despite challenges, the company remains a topic of discussion on Reddit and StockTwits. It's evident that Mullen has been successful in moving funds from investors to company insiders, but this shouldn't go without mention. Regardless of one's opinion on ethical business practices, David Michery and his team have received millions in compensation. The board consists of insiders who have had no difficulty granting the CEO many anti-dilutive shares, while regular shareholders suffer from decreasing stakes. The number of outstanding corporate shares has significantly increased from 24 million in 2022 to approximately 1.75 billion at present. Mullen has managed to stay afloat thanks to dilutive offerings. They even raised $350 million in stocks and bonds since 2020 to survive, as the company uses up about $180 million in cash every year. With only $68 million left in the bank, Mullen must gather at least $100 million more to make it to the year's end, provided the cash burn rate remains unchanged. In addition to its other activities, Mullen is currently involved in the debt markets, and their most recent transaction has generated an additional $150 million in notes. Despite the complex shareholding structure, this accomplishment is noteworthy. The terms of the deal include a floor price of 10 cents for conversion, an interest rate of 15%, and the inclusion of free warrants that can be exercised at 185% of the common stock price in case the stock price rises after the first exercise. Now, electric vehicle companies must secure funding to create their own products. Tesla spent nearly $400 million in cash from 2006 to 2010, while making less than $150 million in revenue. Rivian, an EV startup supported by Amazon, has used up more than $8 billion in just 3 years. Building new car factories is costly, and Mullen has chosen to take that path despite the dangers. Mullen's burning question is, how can they escape from this situation? In the last quarter of 2022, the company seemed to have recovered more than $40 million from its recent purchase of Bollinger Motors. Although both parties agreed on a $107 million cash and $41.6 million stock transfer, Mullen only paid out $29.6 million, as stated in their latest annual report. This could be either a mistake in accounting or a round-trip transaction that artificially inflates asset values. The company used aggressive valuation methods when acquiring Bollinger, resulting in $90 million of intellectual property and patents. This was despite Bollinger having only $4.3 million in assets before the deal. Mullen continues to use similar tactics, with their accountants assigning $33 million of the electric last-mile solutions acquisition to personal property and $22 million to engineering design. These ambiguous categories prevent the acquired assets from being categorized as goodwill, which would suggest that Mullen overpaid for the acquisition. Regardless of how one presents Mullen's Q1 report, it is astonishing how accountants have strengthened the balance sheet by sacrificing the income statement. Mullen incurred significant derivative liability losses in Q1 to bolster its cash reserves. And in previous quarters, it has utilized forceful accounting methods to shift as much as possible from goodwill to intangible assets. Now, before we continue, I'd like to thank you for getting this far, and if you want to know what to look out for in the coming days, then make sure to watch this next part. There's another good news for the company. Mullen Automotive shareholders can witness Bollinger Motors' B4 chassis cab electric truck at the upcoming Work Truck Week 2023 in Indianapolis, Indiana. The event, organized by the Association for the Work Truck Industry, runs from March 7 to March 10 and will feature presentations by several companies, including Ford, Workhorse, and ISUZU Motors. The B4 commercial truck aims to impact the industry with its 7,080 pounds payload and 185-mile range. Level 3 charging can boost the battery to 80% in just 1.2 hours, while Level 2 charging can do the same in 4.9 hours. The truck uses a 1Next energy battery with the 1Aries LFP chemistry, which doesn't have nickel or cobalt. Bollinger claims this offers improved toughness and permits charging up to 100% daily without any negative effects. Bollinger is no stranger to Work Truck Week, having participated in the event before. In 2022, they showcased their B2 chassis cab and chassis truck platform, and in 2021, they displayed their commercial platform for electric vehicles. The status of the B4 truck remains unknown as both Bollinger and Mullen have kept quiet about it. However, it was announced in September that Mullen had acquired a 60% controlling interest in Bollinger. Currently, the company is developing the alpha prototype of the truck, which started during Q4. In addition, the design verification prototype is set to undergo testing in Q2. Bollinger is also creating a stripped version of the B4 chassis. The alpha prototype of the B4 stripped chassis will undergo testing in Q4, followed by DV prototype testing in Q2 of 2024. The commercial demand for the B4 truck remains uncertain, with no disclosed inquiries or reservations. So, will you be on standby for this event? And what do you think of the MULN stock? Let me know your thoughts in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know more about MULN, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.